Geological Horseman here. In this video I'll talk a bit about Eskay Mining, the new latest news release, and what I see going forward, let's say. As I've stated a bunch of times, Eskay Mining has become my largest shareholding, just from basically doing nothing but sitting in it since I bought my initial position, which was a pretty big position to start off with, and it's of course grown along with share price over the last year or two. So I mean, my plan has been to just hodl, hold on for dear life in these growth stories, because I think that's the where the edge is basically, because I think the let's say lack of reaction to this news release is a good example of how the market actually works today. It is extremely short-term focused, and I don't think there's any opportunity really in trying to play the short term, because that's what everyone is playing. So typically that means that some let's say exciting catalysts can at times get overly discounted to the upside because everyone wants to get rich tomorrow, and at the same time, boring periods or whatever tend to make companies too cheap, because simply due to this opposite side of that coin, that if you can't get rich tomorrow, why buy a stock? I mean, that's pretty much how I see. I think that explains a lot of the behaviors and pricing out there. So I mean, in my opinion, the best edge is to look farther ahead than the market and buy the future priced according to the short-term expectations. So basically, it's time arbitrage. If you're excited about catalysts that are like, let's say 6 to 12 or more months out, and the market is bored with the short term for a stock or whatever, I think that's a huge opportunity. I think that's actually probably the easiest way simply to beat the market, and at very low risk typically. Because, I mean, one thing is obviously that the less things that can go wrong as well has an impact on the risk reward. And if a company is not doing too much, or there's no material news release that could sink a case or a company, I mean, that means there's lack of risk really. So this news release, I mean, it was one of the meatiest news releases we've seen out of Eskay Mining, and everything or most of the content basically is tied to the long-term growth trajectory and blue sky potential of Eskay Mining. And lo and behold, again, it wasn't enough to excite a short-term focused market, and that's why I think there's again so much opportunity, because this was I even saw some people like, why put in a hold for this, for example. I mean, you can debate whether when you should put on a halt or etc. But I mean, I think it was implied that this is not a material news release, and I think that just speaks to how the, let's say, marginal investor thinks that this wasn't material. And especially if you look at the Mr. Market's reaction, it would suggest, I think Eskay actually ended down 1.5% or something. So basically, like, it was a nothing burger. So if you're already inclined to, like, okay, you have a short-term focus and you worship Mr. Market, then your confirmation bias, let's say, sets in as like, yeah, this was okay, this is about long-term potential and news releases months from now. and then you see the lack of response in the market, and you're like, yeah, 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 I'm not excited. I'm not that excited about this, and neither is Mr. Market. So it's like, yeah, it was a nothing burger. In my opinion, that's like, I mean, basically confirming everything I've said about having a longer term perspective, because this was anything but non-material. For the simple reason that uh, this news release basically de-risked a lot of an immense amount of targets. It basically suggests that yes, Jeff North here, for example. Perhaps most importantly, the alteration index values for several rock chip samples gathered in the northern half of the target area are very high. A clear indication of one or more strong VMS systems is present in this area. Okay, I mean, we're gonna get to what this might mean later, but obviously positive. It's like, okay, Jeff might, get even better, let's say, to the north. And, as I've shown in my latest piece, there are still a bunch of horizons that are, expected to be there, but we haven't even drilled into yet. Then you have Jeff South, arsenic and mercury in soil values are modeled to strong elevator across most of the area. This target potentially holds a major extension of the Jeff deposit to the south. And then it just goes on and on and on about a bunch of targets around TV Jeff, which is basically the main trend, where we've had these, monster holes coming up from especially TV so far. So I mean, this is obviously great news, because before this we had, they had done SkyTem, which suggested like, okay, we believe because it was SkyTem that helped them target Jeff and TV, and made these last two drill campaigns so successful. So I mean, the more information they and the market gets about, okay, this SkyTem tool seems to be very efficient, especially in the hands of the kind of brainiacs that we have in Eskay Mining, which I've discussed previously, that I think the people involved is like, I don't know, 30-40% or more of the case. I mean, you can put this land package in a junior with, let's say, a lot worse people involved, and you won't have you for sure won't have the same success or the growth trajectory or ROI on dollars invested, etc. So it's a huge thing for Eskay Mining, in my opinion. And then just let's, we'll get back to all these slides here, but let's just think about, okay, what's the price here? Okay, let's just first look at Skina Resources, which is our our closest neighbor, and has the flagship version, let's say, of what we would want to end up with, so to speak. First of all, this is the current version, pretty much, of Skina Resources Eskay Creek deposit, and it also includes these shaded areas where historic underground mine development. So what was mined previously by Barrick and Homestake Mining was the super high grade core of the Eskay Creek deposit. I mean, the ridiculous grades. I mean, way overkill. Let's say. I mean, you'll be happy if you have an underground mine with, like, I don't know, 6 grams per ton or higher, and this had, I don't know, remember exactly, like 40 grams per ton AU, like 2 kilograms of silver. So it was mind-blowingly profitable, and even though it was very small for a VMS deposit, it's probably would be worth like 4 or 5 billion today, or perhaps even more now, actually, where given where gold is trading. But here you also have the outline for Skina's current deposit, which is a multi-million ounce deposit at like 4 or 5 grams per ton AU equivalent. Some of it, not all, I think, will be open pittable. So I mean, to give a sense of scale, again, this is 1.6 kilometer scale bar. And okay, how much is this worth? I mean, okay, the original was worth like 4 to 5 billion. And then you have the remnants, the lower grade stuff around within this pit here. And if you look at, where is that feasibility study, pre-feasibility study for the second part of this Eskay Creek story. After tax NPV of 1.5 billion, IRR at 56% at 1500 gold. If you look at sensitivities down here, I don't know exactly where we're trading at right now with gold. I think we're at 1920 or something. It was like at 1700 gold and $24 silver. After tax NPV is 1.6 billion. Right now it might be closer to 1.9 billion, let's say. We have to remember that, I mean, fuel prices are up, etc. But let's say 1.6 billion, to account for that. On paper, in a PFS staged economic study. So, again, it's like, okay, theoretically, grand super high bonanza price just within this, I think it's around 1 kilometer, was 4 to 5 billion. And then you add the remnants today, which is worth around 1.6 billion. So all in all, if you count both, it's like closer to 5, 6, 7 billion worth of economic value just within this footprint. And even if, I mean, we have no idea if we're gonna hit this a small super high grade core like the Eskay Creek deposit had, but Skina has obviously showed that you don't even need to, because this is worth around 1.6 billion, and that's much lower grade stuff. And you can see also, I mean, the stratigraphy here. This is the contact mudstone. So this is the youngest rock package where VMS is has been confirmed in, and the Eskay Creek deposit is centered around this. We're at TV and Jeff. I mean, we're down in the lower mudstone and even lower mudstone, etc. So we haven't yet even drilled into this stratigraphy or this VMS mineralization, if it's even there. And that's what also makes Eskay Mining quite unique, because we're finding monster holes below where the Eskay Creek horizon is, and I mean, it used to be that people thought that this was the only VMS bearing horizon, but as Eskay Mining has shown, they're up to I don't know how many. I think they basically confirmed VMS mineralization in like 6 different horizons or something like that. So it's an incredible story for a bunch of reasons. It's not just the lateral potential, it's the vertical potential, and potential that wasn't even known before. And this was one of the slides that came with the news release. And again, this is like the footprint of the Eskay Creek deposit, both original and the remnant, worth let's say 47 billion. But let's just say, for simplicity's sake, let's just assume that there are no more original Eskay Creek super bonanza deposits. I don't. The best part is like I don't think we need it. Again, it's like if this is 1.6 billion alone today, and that is probably gonna grow. But you can see Eskay Mining controls the lion's share of the actual possible extensions, and there's like 3 anticlines running through here, and Eskay Creek is on along one anticline. Here again we have a view of the deposit zoomed in, and here you can say historic underground development is in the darker shaded stuff here. So it's like, again, very small footprint, billions of dollars in value. Okay, yeah, here we get back to that again. But as it relates to, I just put this together to get a sense of scale, and why I think, I mean, again, it's like ridiculous in my opinion, how short-sighted the market is, and why I personally think that this market is very easy to beat. It's just that most people beat themselves, because what makes sense to the majority, is what makes sense to the market, because the market is the majority. So if you just go along with that, like, yeah, I think the same, and it's like, yeah, it makes sense because everybody thinks it makes sense, or it's like, we have our confirmation bias, which basically gets backed up by Mr. Market, and we think that, then people ask themselves, how can't I be making money in the junior sector or investing overall? I mean, I think it's a pretty obvious thing to like conclude that, okay, how does the market function? How does the majority think? And then you just basically do the opposite, or at least figure out, okay, how can I, given how I know the market works, how can I create an opportunity out of that? So I mean, I think, again, it's pretty obvious in a case like this, because this news release basically confirms that, yes, all these geophysics targets that were outlined by SkyTem, which, prior to this release, it was like, yeah, okay, let's say, the lowest de-risking factor, because, okay, it was pretty much just geophysics, even though they had we've seen from Jeff and TV that, yes, it appears that the SkyTem data and the way that the team is interpreting the SkyTem data is indeed leading them to where there's mineralization, because I mean, we hit some bonanza holes and thick intercepts at thick widths on the first drill campaign, and this year's drill campaign, of course, we've had many, wide high grade intercepts, and it's still so super early that there's no way we've even hit the best parts of any system. We haven't even found majority of the parts of any of the systems. So it's like, can you see things getting even better? Just, at TV and Jeff, I mean, first of all, at TV, they stated it, because they've done mostly it's blind to semi-blind drilling. They stated that, yes, it appears that the TV system, the area that they've drilled so far, is getting better to the south and down dip. So it's like, you already know pretty much there's a high likelihood of the monster holes that the market got excited about is going to come in a higher quantity after next season, because they have like 15 or 18,000 meters earmarked for the TV system. So if they also know where it gets better, at least in the horizons that they've been drilling, okay, that's a pretty good bet that at least we're going to get even more of the stuff that got the short-term market excited from TV. And then you have like, how many there's like, what is it, like 8 targets, and like you read in the description, this seems to be a very hot area, and also to the south, and even all the way over here on the other side of the anticlines. Like, yes, Geochem suggests that the SkyTem anomalies that they thought were, indicative of more VMS mineralization also has, anomalous values in gold, silver, and other pathfinders. So it's like, it's a SkyTem anomaly alone, it's like, maybe you discount those targets heavily, because that's like one of the lowest probabilities, let's say, just because it's just geophysics. But if you get a confirmation of there being, smoke upon smoke in the form of geochem, you obviously have to hike up the implied value of all these targets that where you have both geochem anomalies and SkyTem anomalies. And how many news releases can you see in this picture here? And then again, it's like to get a sense of scale. This is the Eskay Creek deposit. So let's say this alone is worth some 1.6 to $7 billion. I mean, how many of these this VMS footprint can you fit in this picture alone? And we know the TV has, put out what was it, like 170 meters or 4 grams per ton AU equivalent, which was obviously one of the best holes that's been drilled by a junior last year. I think it's just remarkable. And again, if you, okay, let's not to get too hyperbolic, but it's like if this stretch of land here has like, at least $1 billion potential. Maybe you thought that, well, the implied value of the geophysics target alone at a similar scale, let's say, was, I don't know, if you de-risk 1 billion in potential with, a huge amount, let's say, it's gonna sound, it is actually a lot, but let's say, $5-10 million, just, per footprint, and then you add the geochem anomaly confirming it, so maybe it jumps to, maybe the implied value doubles due to another de-risking factor. So it's like, what is the implied risk-adjusted value of all these targets, given that we know how valuable this is? I would say that the implied value of Eskay Mining, the hardest part is of course to discount, based on the time factor. But regardless, it's like, if you even thought that each target here had as small as $5 million implied value, and then it got jacked up by 5 million more, that's 10 million per target. And I think that's lowballing it by a mile, given how valuable Eskay Creek is and given the drill results we've had out of TV and Jeff. And of course the closest anomalies should have even, be de-risked even more, because they're just probably extensions of the known systems we have at TV and Jeff. You could fit the Eskay Creek footprint here, you can fit it, easily here, you can fit it here basically. That's just from this part of the Eskay Mining land package, which is huge. So it's like in this, if you just consider blue sky potential in this picture alone, if you consider the fact that this is 1.6 to let's say $7 billion in potential, the blue sky is just obscene. The blue sky is just obscene, and it's I think one could more readily suggest that due to the fact of the the results we had out of TB and Jeff. We know there's high grade to bonanza grade. We know there's good widths. The feeder zone alone, one of the feeder zones, at least at TV, is like at one in one drill hole it showed 90 meters true thickness at like 2.6 gram per ton AU equivalent. So it's like Quinton has suggested, that's like incredibly thick feeder zone. So that I think, if the feeder zone is 90 meters thick, how large and rich might the mushroom cap be? And we've had like 2-3, maybe not even that, drill holes into the actual VMS horizon. So this is like super duper early, even at TV and Jeff, where we've also, like I discussed before, we haven't even located most of the actual units at Jeff. We have just drilled feeder zones so far. So what happens if, when we get some more holes into the VMS horizons and find the VMS horizons at Jeff in the first place? And there's just so much vertical growth. And remember that like the original Eskay Creek horizon and most of the remnants right now of the $1.6 billion deposit, that's pretty much limited to the contact mudstone, immediate contact mudstone area. So that's way up here. So we haven't even gotten to that yet, and we're having the results we're having, and it appears to, it's obviously, a stacked VMS system. So whereas the footprint, for example, of Eskay Creek is this. So, but think of this like a one-story building at this footprint. And right now, given what we know now, it seems that, for the same footprint as the Eskay Creek deposit, there might be, many more levels at TV and Jeff. So it's like, what's it called? A high-rise building, let's say. Obviously, you can fit more people in a high-rise building with the same footprint than you can in a single-level house, for example. So I think that's also one of the things that makes this story so unique, and almost, blue sky is almost outrageously high given what we know now. There's no guarantees that it will all materialize, or even large parts of it, but that doesn't matter because it's obviously not priced in. Because again, if this is 1.6 to 7 billion in potential, and we're at 400 million, and you can fit a lot of these footprints in just this slide alone, that tells you that there's a lot, potential left to be proven up and, confirmed, let's say. But I think it's just, the blue sky is just ridiculously large for Eskay Mining. And here we have the Scarlet Ridge prospect and the Torn Lake prospect. And here you have the scale of Eskay Creek. You can fit like 2 in the Scarlet Ridge prospect. You can fit at least 1 here. And again, it's like the Bleg samples, soil samples. They even found some, decades old core and chip samples that confirmed, yes, this is, precious metal bearing. There's some, high grade samples, and obviously these guys that drilled it in the 80s or whatever, they didn't have the same knowledge as they have today. Otherwise, there's no way that, the team at Eskay Mining just, we'll start out with TV and Jeff, and immediately first 2 drill campaigns hit, high grade holes at good widths. So it's it just shows how much the people factor is involved. There might be a giant. There might be a VMS deposit twice the size of Eskay Creek just in this underlying this area, and one more here. And then people, of course, the typical things. Well, that's not confirmed. Obviously, it's not confirmed, but it's not priced in anyway. It's like, are all these targets priced in, and all these targets priced in, and all these targets priced in? Of course not. If this is 1.6 to $7 billion worth, every target here is heavily discounted, and more so than I think it's warranted. But that's how the market works. And again, it's like, the geochem in this news release de-risks and hikes up the probability of success at any of these other targets. And if the market is too short-sighted to price in any of that, the de-risking value, that's going to be priced in one day when the longer term becomes the short term. So I'm just simply, front running that I'm front running the fact that TV is gonna, I think, show a lot more monster holes this time around, and we might have even more discoveries, etc. So, what do you think is gonna happen to Eskay Mining if the market sniffs out? Well, we're getting closer to drilling and assaying, and yes, there's probably gonna be even more monster holes, and that's gonna get people excited, because then there's a chance to get rich overnight. That's gonna bid up the stock of the company, I think, and it also, if they're gonna test a few other targets, which they're gonna test a bunch of targets here, I think, that's gonna add further more fuel to the fire, basically. So I'm just front running that likely future by buying today because it gets discounted by the, let's say, lack of excitement in the short term. But when that long term turns into short term and it's exciting, people are gonna buy because the reason why people didn't bid up this news release is the reason why they're gonna bid up the future news releases. Again, here's the, or not again, but here's the slide from the Vermilion region, and here's the footprint of the Eskay Creek deposit. So let's say you can fit, there's some, well, I mean, smaller, let's say, targets, and you have Spearhead, which looks, pretty large, and here we have C10 that hasn't had any soil sampling, it appears to. So it's like, okay, there's still, I mean, this is, they barely had time to scratch the surface at these targets this year. So that's gonna, we're gonna learn even, a lot more from all these prospects just from the next next field season, and that's, on top of the actual drilling that's gonna be done. So it's like the growth curve is just, it's a steady trajectory up, and it has been for months. For Eskay Mining, every news release basically, especially when there's added context in terms of talking about the blue sky potential, it has just kept on increasing. So it's like when you think about how early we are, when do you think the actual growth curve is is probably gonna wane off? Let's say. I mean, now it's just blue sky keeps increasing, the risking keeps hiking up the implied value of the blue sky, and we get more probable growth with a news release like that, like this. So we're in a steep growth trajectory still, and there we could be. I think Eskay Mining could be growing for years or maybe decades, given that they control such a large land package with so many targets. And we're gonna, they're gonna be hopefully, finding even more again, more levels of this high-rise building, so to speak. And this is from a recent article. And here you can see, I mean, the three anticlines, Bleg samples, these clusters of high grain, very anomalous gold and silver. And like you see here, I mean, the TV and Jeff area, yes, it's anomalous, but it's still only orange. So it's like kind of a subtle anomaly, and they described that as well in the when they talked about the geochem. I mean, the fact that TV, and they've had such great results from TV and Jeff, even though like the Bleg and the soil geochemistry is like it's quite subtle, and still it's hiding a 90 meter true thickness TV feeder, for example, that's pretty much outcropping. So it's like in terms of tip of the iceberg, etc. I think that's just proves even more that there might be a large thing hiding underneath even subtle anomalies. I think this slide from a previous news release kind of again sums it up. I mean, Eskay Creek and Skena's deposit would be up around here in terms of stratigraphy. So again, there's like Jeff wide open to the upside. Haven't even found any VMS horizons yet that belongs to these stockwork zones. I mean, where did these feeders end up? What did these feeders end up feeding? At TV, same stuff here. We've actually found an upper massive sulfide horizon, lower massive sulfide horizon, but there should be a feeder to this lower massive sulfide horizon, and then they found a third feeder zone. So okay, there should be a VMS, a massive sulfide horizon that belongs to this one. And we've had just a few holes into any of the upper massive sulfide zones or any of the massive sulfide zones. So it's like TV and Jeff, I think, to sum up, is gonna get better and better and better, and they're gonna be expanding the footprint of these systems. So it's going to grow vertically, it's going to grow laterally, and they're going to be testing a bunch of other targets. And again, it's like this is a billion to multi-billion dollar price alone. So this is a ridiculous story. I expect to be holding on to Eskay Mining for years to come, and I expect that when I look at the value of Eskay Mining, it will just increase for again years to come. Basically, that's how much probable upside and potential upside there is. How extremely long the runway for growth is. You don't find a runway for growth in on this order in many juniors. And again, it's like even for Skeena Resources, I mean they control a much smaller land package of the actual Eskay Creek district than Eskay Mining. And then you factor in the fact this is in the heart of the one of the hottest areas in BC. You have Newcrest down to the southeast. You have Seabridge next to us. You have of course Eskay Creek here in Skeena, and Franco-Nevada is a shareholder. So it's like you're basically Eskay Mining basically has the guts of this and more targets than most juniors will ever have. And and on that note, it's like now people are of course debating, okay, dilution, okay, when are they gonna raise, how much are they gonna raise, which is typical. I mean, we've been pretty much trained to care a lot about dilution, and it's typically an extremely important thing. And of course you would want to limit dilution because it has share count has big leverage to your final pay, let's say. But at the same time, it's like, again, I think it's important to, because there's so much noise and info stuff to process with every case. I think the it's very important to consider, okay, what are the actual main value factors or the main takeaways or key investing factors for any story? What should I really be focusing on? And to me, I think it's obvious that it's the sheer size of the blue sky potential in Eskay Mining, the growth potential, the probable growth potential. So like that's a lot more, in my opinion, important than if Eskay Mining will, let's say, if they raise money before this coming season. We have warrants coming in, etc., before August, so it's not like we're strapped for cash or can't even start. But it's like I don't really worry about that, because again, it's like either one of these targets could be worth so much that a percent dilution here or there, it's eclipsed by the sheer price basically that money could unlock. But at the same time, yes, less dilution, let's say, if we have a steady pace of lower dilution, yes, that could actually, I mean, instead of it becoming a with less dilution, maybe it could become a, I don't know, 15 bagger theoretically, instead of a 12 bagger. But it's like you would be happy obviously with a 12 bagger. So it's like I don't think it's, let's say, rational to say no, let's say, to short-term discounts due to how the market works, because yes, I'm a bit worried about dilutions. Like I think that's basically missing the whole main point of this case, that the blue sky, etc., is so large, and that, I mean, dilution is gonna get eclipsed anyway by the sheer potential. I mean, success in Eskay Mining is not gonna be riding on if you dilute by 5 or 7%. for example, or at any stage of dilution, etc. So I, again, it's like I don't really care. I mean, I have my shares in physical form, so I can't even trade my very large position anyway. So I guess that actually makes me a bit more unbiased, I think, because I'm, until further notice, I can only hodl, and hodling has been my only strategy with Eskay Mining because of the growth trajectory, and this usually is just hikes up the implied value immediately of every target here where Geochem and SkyTem lines up. It hikes up the probable growth from TV and Jeff, and it hikes up the absolute blue sky potential with like the size of Scarlet Ridge, and then you have the Torn Lake prospect, etc. So I don't think I'm in Eskay Mining for what I see coming in the next 10 to 20 to 30 news releases, and my base case is that it will be considerably worth it will be worth considerably more than it is today, and I don't really see the point in like trying to trade every news release or whatever, because that's what everyone is trying to do. Okay, now it's boring, so everybody should be out. Okay, but at the same time, okay, if I'm buying when you're saying it's the boring period has started, which is not even that long this time around, simply because how late the assay results were. What you're also saying is that you're gonna buy back when it gets more exciting. So I mean that's one way to just play the lack of patience in investor. Okay, I'll buy when it's boring, then I'll have some almost risk-free returns when you buy back, if you want to trade it that way. So again, it's like I don't think it's wise to do exactly what everyone else is doing, because everyone else is thinking the same thing. So you have to play a different game. It's like, okay, this is how the market views it. How can I take advantage of how the market works? That means, in my opinion, one of the easiest and most low risk ways to play it is to simply buy the future when it's priced in short term expectations. Because again, if this market was really rational, the implied value of Eskay Mining went up substantially with this news release, and so should the price of the stock do if it was indeed rational. But it isn't rational. It's based on short term, on investors with short term investing perspective. So when long term becomes short term, then a long term investor will profit. But I don't see, again, it's like I don't wanna I don't want to guess every news release. All I know is that after all is said and done, I think it's going to be after the next 10 news releases. If I go on live on a distant island or remote island somewhere off the grid, if I come back after the next 10 news releases, I would be shocked if Eskay Mining wasn't showing a hefty paper profit from these levels. And again, I used this example to basically highlight this short-term, long-term arbitrage in the recent article. That okay, if let's say I just had a base case set here around $6.5. Okay, if you bought prior to the assay results, when expectations were high, people were excited, because there was a chance you could get quote rich tomorrow, then you have a 92% return, assuming this is theoretical target price is correct. And then just a few days later, with nothing really having changed, you would have 187% return. So it's like my opinion, the best risk reward is to guess, have a crude guesstimate, a base case. What is the growth trajectory? Do you think it's going to be higher in the next 6, 12, 18 months? If so, every short-term gyration opens up huge opportunities. So like a few days, a swing that lasts just a few days based on one news release can produce very different 1 year returns for an investor that's patient enough to hold it for a year. And with this news release, I think the actual growth trend actually steepened, and the implied value got hiked up immediately because so many targets got risked, since you have both geochem and geophysics coinciding. So I don't want to guess too much. I didn't want to put a higher number than this, but it's like my base case, to make it simple, is that the value of Eskay Mining is going to go something like this. So I'm just gonna keep sitting on my ass, which I've done for the last 1 or 2 years, and I think it's gonna go something around this. And as it stands right now, I still think there's uh, 10 bagger potential in Eskay Mining. I mean, if we're talking really long term, given all of this, that's actually at face value that has more than five, much more than a 10 bagger potential. But again, not to be too hyperbolic. That's how I do it. I mean, most people won't do it like that, obviously, because it requires patience. It requires not getting excited every single day, because there's always a company out there that's drilling, and where people think they can get rich overnight. Whereas if you actually want to have, in my opinion, solid returns over the long term, you have to play the long game and take advantage of the short-term gyrations, and just expand your investment horizon, or your decision horizon, or what time horizon you base your decisions on, from like the next month or two to like the next year or two. Because that's gonna, I mean, I get very greedy when I look at the info in the news release and think, okay, all this info tells me that Eskay Mining is just gonna have a higher probability of being worth multiple billions, and it can go even higher than that. So in that case, like, okay, I look at the price today, then I get greedy, because I see a future of a multi-billion-dollar company, which you can buy for a lot less than multiple billions. And every basically time it gets short-term punished, I get a discount on this future as I see it. Long rant. I hope it made some sense. And of course, I mean, this is what has worked very well for me, and I think it's the best way to play it. But again, most people will not play this game, and 95% of people do not beat an index over the long term. And I think those things coincide. If you think and act like the majority, you will have mediocre returns, or even probably less than mediocre returns, because 95% of people actually lose. Consider me biased. I have a big position in Eskay Mining, and they are a banner sponsor as well. So do your own due diligence, and always make your own decisions, because I don't share your profits or your losses. Thanks for listening.